Kia ora. The 2026 BDO Construction Sector Report shows a sector that is growing resilience but not yet robust. Overall, business performance sentiment has softened year on year, with just over half of leaders feeling positive about current performance and expectations for the next 6 months remaining cautious. Economic and political uncertainty continues to weigh in on construction business leaders, making it hard for them to invest, hire, plan for growth. This uncertainty has led to many firms facing a tough 12 months since our 2025 survey. In that period, close to 2/3 have had projects cancelled or put on hold. Nearly 2/3 have had losses up to $100,000, and a quarter have had a counterparty go into liquidation in the past year. Margin pressure is a major theme. 7 in 10 respondents expect fuel price inflation to impact net profit margins, and around 7 in 10 expect input costs to rise over the next year, higher than the average for all businesses surveyed in the May 2026 BDO Business Performance Index. At the same time, work has been won in the competitive, tender-led, price-led market, meaning some businesses are staying busy without rebuilding profitability. Even so, there are signs of resilience emerging. More than 3/4 have sufficient confirmed work over the next 6 months. Many report stable or improving margins, and more than half are confident that they can fill vacancies over the next year, although this may be tested if construction activity increases. Encouragingly, like last year, construction businesses feel they have adequate labour supplies to meet their current needs, especially considering recent labour trends to Australia. However, it will be interesting to see whether this positivity remains once business pipelines and construction activity grows, considering the public infrastructure investment pledged by the government in Budget 2026. Insolvency risk is still a concern, although construction business leaders survey appear slightly more positive than the broader business community. Only 4% expect to be unable to meet their financial obligations or experience insolvency in the next 12 months, compared to 7% across all sectors in the May 2026 BDO Business Performance Index. Regionally, the picture is mixed. The South Island leads the forward outlook with the strongest confirmed forward work position, followed by Auckland. The rest of the North Island shows stronger current business performance sentiment and hiring intentions, but is the only region to feel less positive about the next 6 months. Among the subsectors, civil and infrastructure firms report the strongest current sentiment and forward work position. While their 6 months outlook is more cautious, more of these firms expect gross margins to improve over the next year. So the message is clear. This is not a sector that feels confident in the traditional sense, but one that continues to adapt. For construction leaders, the focus now should be on discipline, knowing what forward work really means for cash flow, holding firm in pricing, staying alert to counterparty risk, and looking for practical efficiencies across the business. The sector may not be out of the woods, but businesses that protect margin, manage risk, and make clear, disciplined decisions will be best placed to move from resilience to recovery.